Good morning, everyone. It's Dan Basse back with Ben Buckner here on Tuesday, the 17th of June. Looking at ag markets this morning, or grain markets this morning, that are slightly higher, at least corn, soybeans, and wheat. The grain market's trying to bounce here. Of course, the war's escalation in Iran is in the background of all this. Crude oil is back up a little over $1. That's got the market somewhat higher after yesterday's selling, at least in the grain market. So the oilseed market did hold stronger, particularly a new crop. But I think as we look forward, it's Ben will highlight this. It's a lot about weather. It's a lot about trade deals, and that'll be the key going forward. The crush data, or the RVO, if you will, from the EPA and the Trump administration, a proposal, does make these trade deals more important for soybeans now. So China's a kahuna in the room, and whether we get a trade deal by the middle of August, I think that weighs importantly, whether soybeans are over 12 or near 9. So that'll be the key in terms of trade. So Ben, why don't you take us through where we are here this morning?
Yeah, sure. So to me, I think outside of maybe the EPA's proposal, of course, that the market's still digesting, things have been pretty dull. I mean, we are unremarkable in terms of grain price action specifically. So you see here seasonal trends, and I'm sure everyone watching this has seen these all over the place, but it makes sense. I mean, it's clearly the corn market especially has moved its focus, I think, completely from what will be ending stocks this year at the lower end of history, especially stocks to use, but it is that, potentially 16 billion bushel crop. That is what's driving price now. And as we'll touch on, we don't really see a threat to that today. So it does look like corn and wheat following normal seasonal trends exactly. And so the background there is, again, you don't usually find lasting lows in the grain market till about August or September. And of course, it's how you get there. There will be volatility, but we just want to communicate to clients that, here's where we are in the evolution seasonally of grain markets, and there still is downside risk, I think, is what we want to communicate. And so keep that in mind as we're thinking about risk management moving forward. Soybeans, though, I think has, like normal years, a lot more unanswered questions. So, of course, it's unlike corn, it's the loss of acres planted in the U.S. I think that's still kind of a big deal in the background. We're not going to know exactly what we get for Northern Hemisphere oilseed production, U.S. soybean production specifically, until we know August weather. So you kind of rewind these seasonal trends about 30 days. So I think soybeans maybe don't fully relax until the second half of July, and that's just part and parcel of the normal evolution of soybean price discovery. And also we've got grain conditions improving, and I think you're going to see these all over the place today. Spring wheat 53% good excellent compares to 45% initially in late May. And corn 72% good excellent, exactly where we were last year. But it's the counter seasonal nature, I think, in the crop condition improvement that we want to highlight. It is not normal for crops to improve, at least in good excellent categories in the U.S. after May or very early June, but that's happening. So, we're trying to measure odds of a supply threat as we get into key weather periods, and we just see odds of those being pretty low. And when we kind of run our very preliminary models in corn, it's just you got pretty good odds you're going to see trend yield. So we don't think there's any disruption to the USDAs or the market, 181 bushels an acre, at least today, and what we know with 2-week weather forecast. Soybean conditions were down just a bit at 66% good excellent, but like we have highlighted before, we want to compare that to average, and you can see here that we're so well above average. Average for this week, it's about 63% good excellent. So when you're running these really preliminary yield models, you're going to get yields at or above trend, and that's just kind of where we are. Again, thinking about seasonal trends, long-term downside risk is still intact, and the debate we've got is just kind of measuring, is there a supply threat big enough in the Northern Hemisphere to disrupt these patterns? And we don't see that today still. And that's been the message for a while. And something we've highlighted about every other week too is we're already starting to check off some pretty key boxes in corn, at least. So crop progress in the South and Southeast has been right on track, completely normal. So the Louisiana corn crop is now fully reproducing, 95% silking as of Sunday. You kind of see here from across the South and Southeast, anywhere from 9% to 65% silking. Probably add 7 or 8 points to that this week. And on the right, you see rainfall recorded based on rain gauges just since June 10th. And so I think, there's actually been a lot less irrigation used in the Southeast this year. And so those corn crops are pollinating adequate to abundant soil moisture and active rainfall. So I do think the USDA's kind of preliminary ideas on production are correct there. So we think that if you do get trend yield above trend yield in the southeast for corn, you are going to add maybe 120 million bushels of production to that region. That corn will be available, starting August 15th, August 20th. So the runway is getting smaller before we start to replenish, physical cash corn supplies in the U.S. So again, it's kind of a small, minute detail, but the southeast corn crop probably does look very good, and trend above trend yield there is intact just because it's pollinating now and really, really good weather. Soybeans, again, more unanswered questions. And so I think the NOPA report yesterday did throw some fire to the market that's already been digesting potentially surging demand starting 2026. So kind of we want to keep things as simple as possible at Ag Resource to start with. And you kind of see here on the right, U.S. soybean oil stocks tend to decline or contract seasonally after about March or April. And that's what we're seeing now. So NOPA member stocks on May 31st, 1.4 billion pounds. It's down 20% from last year and probably gets smaller. Currently, it's because of exports. It's not because of biofuel production, but it's just very, very normal for the soybean oil market to get very, very tight. So again, I think that provides some context to the intensity of the rally in soybean oil we've seen the last 2 trading sessions. And on the left, you see soybean oil consumption. Again, because of exports, not because of biofuel, was the highest it's ever been at just under 2.5 billion pounds. That's up 8% year over year. So the soybean oil market's not abundantly supplied and probably gets tighter. Though we still think you got to look at the matrix and where do the biofuel guys start to lose money. And we do think that still is about 56, 57 cents per pound. I think what's interesting about this, excitement in the soybean oil market is we're probably going to sort this out really, really quick. It is a long-term structural change in the market, but for now, we might have sorted this out, the EPA's proposal this week. I think the market's been very, very quick to act there. So just keep that in mind as you're dealing with, vegetable oil market risk. And again, thinking about odds to this trend that we've got, seasonally bearish trends in grains, eventually bearish trends in soybeans. Is there anything to stop that, to disrupt that? And we still don't see anything yet. You can see here on the left. I think this has been important this year is to kind of focus on what's in front of you, 5 and 7 day forecasts. They have all summer looked different than long range forecasts. And I think this is the better reflection of reality. It's rained quite a bit. It's going to rain even more over the next 7 days, and targeting a lot of areas that have been dry and still have drought to be solved. I think that's important. Eastern Nebraska, Wisconsin, parts of Minnesota. That's where you're going to see rainfall of 1 or 2 inches in the next 7 days. And then just looking at, odds that something changes as we start to peek into the opening days of July. And on the right, you've got NOAA's updated precipitation probability forecast. So again, just odds still seem low to us that you do have 1, drought development, and then 2, a major threat to trend yields in the central U.S. And that includes spring wheat, soybeans, and corn. So again, trade deals, weather, biofuel policy. Biofuel policy has given us a bit of a lift, but otherwise we do think that still kind of status quo. I think we're on our way to building grain stocks in the U.S. and globally. And so then it is a matter of where is the next threat? And we were even talking this morning as, one of the hot spots weather-wise is still Western Europe, but what does that mean? And so we'll be kind of fine-tuning that this week with some of our research. What happens if France loses corn yield? Is that a big deal? Does that really disrupt trade flows? We're kind of less sure that happens. But Dan, any comments regarding EPA?
Ben, thank you for the good rundown. I thought it was really good. People that I know who have driven through the Delta have told me that it looks like the Midwest. There's so much corn down there that's now pollinating. It's like much greener than it normally should be. Not a lot of rice, not a lot of cotton. So even soybeans, not a lot of it. So the Delta really is in this point. And next week, NASS will start reporting pollination or silking across the entire U.S. So we'll get some updates on that. But, again, in another week or so, we'll be able to peer into the first part of July. And if there's not a temperature threat for Midwest pollination, I think the corn market in particular is going to relax and start to head down. So good review, Ben. Really appreciate it. Any closing comments from you?
I don't think so. As always, all the best. I think, dollar gets you in for 30 days, of course. We've got a lot of pretty critical research coming out. Even I think today we're going to let everyone know just what we think about the abundance of hard red wheat stocks in the U.S. I think it's an important balance sheet to look at when we think about corn demand even. We're also going to start the process of, our quarterly stocks estimate. So those are going to be pretty critical. Maybe the next big thing in the marketplace from the USDA at least. So be sure not to miss out on that. But otherwise, that's kind of all we got. And again, all the best to the markets today.
Be well, everyone. We'll talk to you tomorrow.